Booking Holdings reporting a blowout second quarter last night. The travel company's earnings came in 30% above expectations and revenue up nearly 6% above expectations. Joining us right now with more on travel demand is Glenn Fogel. He's the CEO of Booking Holdings. And Glenn, this was a blowout quarter. We have not seen the same from a company like Expedia, which missed expectations, not slowing growth, but missed expectations in terms of, not a slowdown, I should say, but missed expectations by a long mark. What's the difference? What are you doing that they're not? Is this international travel?
Well, thanks, Becky, for having me. And we are a very global company, so there certainly are some issues there. Comping against the U.S. last year, we were coming out of COVID, out of the Omicron thing, and it was blowout for second quarter last year. Obviously, a very tough comp for people who are strong in the U.S. Whereas for us in Asia, we had some really good numbers coming up 40% year over year in the second quarter. And that was due to the fact that they were a little bit delayed in coming out. So we had an easy comp. All in all, look, I'm very pleased with how Booking Holdings is doing globally. We're just so happy to see finally getting out of COVID. I said in your show 3 years ago, I was talking about how it's going to be years, not quarters. And it's turned out that way, unfortunately. But we're glad to be where we are.
Would you say that it is still years, not quarters, before you see this growth slow?
Well, we'll see about that. Obviously, a lot of economic things could play into travel. Look, I'm just thrilled with where we are right now. And by the way, we're not completely recovered Asia's still coming back, still has a long way to go, I think, there. And there's still a lot of pent-up demand for travel. People did not travel for 3 years, and they saved a lot of money, and they want to spend it. So I'm looking forward to a lot more travel.
People have been saying for a while that, oh, my gosh, the consumer is going to move on in the U.S. We're not going to see the same continued sort of spending on this. Have you seen any signs of slowing when it comes to the U.S. consumer?
We look for these kind of signals, and certainly you've seen some of the airlines, particularly the ones who are heavy in the domestic airline area, talking about some of the shift. But I think they were talking more about people want to go international versus domestic. And we look, are people starting to go to a lower star rating? We're not seeing that. Are people going for a length of stay that's shorter than the past? Not seeing that either. So we really aren't seeing any signs of slowdown right now, and I'm just thrilled that people are spending their money on travel.
Some of the hotel and vacation rental rates are coming down in some markets. What do you attribute that to?
Some areas, certainly there were some really expensive places because just incredible demand in certain areas. But overall, and we talked about this last night on the call, we see ADRs are up globally. So we're pleased with that.
Where's the strongest market?
Well, the strongest market, certainly in terms of the growth area, when we talked about what we saw in July, and we saw Asia still going very, very strong, 45% up year over year, and that's a really strong number. But again, you got to watch out because you're comping against a period depending on how they're coming out of COVID. Right now, globally, people want to travel, and that's just wonderful.